Let's take a look at your market news now. Asian markets slid as traders got spooked after U.S. Trade Representative Robert Lighthizer said he was considering hiking proposed tariffs to 25%. That's from a planned 10% on $200 billion worth of Chinese imports. Over in Japan, the benchmark Nikkei share index lost just over 1%. Hong Kong stocks were worst hit, with the Hang Seng index declining 2.2%. The Shanghai Composite Index closed down 2.0%. U.S. stocks took a tumble on the back of a drop in energy and industrial shares. Although the Nasdaq closed in positive territory on the back of a pickup in tech shares, including Apple, which released better than expected results. The U.S. Fed confirmed that it was on course to hike, with expectations that it will further hike in September. The Dow Jones Industrial Average fell 0.31%. The S&P 500 lost 0.1%, while the Nasdaq Composite Index added 0.46%. Let's take a look at the rest of your indicators now. Chantal Marks from FNB Wealth joins me now from our JSE studio for more on the markets. Good afternoon, Chantal. Thanks so much for your time. Let's start with Impala Platinum announcing earlier on that they're scaling down production and about 13,000 jobs will be lost over the next 2 years. Their share price increasing though.
Yeah, I mean, the platinum industry has found itself in a little bit of a precarious position because platinum prices, or PGM prices generally, continue to remain under a significant amount of pressure, which has meant that some of their older, deeper shafts have become unprofitable. So in order for them to become more profitable, they will have to cut production at these shafts, and unfortunately that also leads to job losses, which is bad for the economy as a whole. But if Impala is making more money, their shareholders will reward them for that, and that is why the share price climbed on the day.
So someone whose share price is not climbing up but rather going down about 1.9%, Glencore, how much does this have to do with the announcement that they're purchasing their own shares, and why else can we see their share price falling?
So, I mean, it actually has, it's actually an uncorrelated fall in the share price, because usually when a company purchases back its own shares, it means that they're actually taking some shares out of the market, and that should actually increase the value of on a per share basis. So it seems as if the drop in the Glencore share price is unrelated at this point in time.
Okay, let's stay with the mining companies. Anglo Gold releasing a trading update that it expects to report positive basic and headline earnings for the 6 months ended 30 June. And this is a turnaround from the losses reported before.
Yes, I mean, the losses were very much related to impairment charges that they took on their South African gold mines, which they think won't produce as much as they initially thought. So they had to actually remove that from their asset base. But yeah, I mean, the return to profitability is positive, but it actually missed expectations a little bit. So the market was looking for about double the headline earnings per share number that they actually put forward. So a bit of a disappointment there. And it seems to have been on the production side. Production came in a little bit softer than expected.
Okay, the JSE a little bit weaker yesterday. Some analysts saying that that's due to Cyril Ramaphosa in his capacity as ANC president announcing that the ANC will move forward with land expropriation without compensation.
Yeah, I mean, while it certainly didn't help, I really don't think that that was the main reason. It did have an impact on the Rand on Tuesday night after the announcement, but the Rand kind of pulled back again yesterday and really had a very negative reaction, as did the market, to escalating trade tensions between the US and China. I think that really is what is driving market reactions at the moment. perhaps the hawkish Fed also having something to do with it. But if we look at the comments that came out of that ANC Lekgotla, it wasn't really that surprising, and we didn't receive any new information. And the expectation is still that it will be handled in a very measured way, but we don't have any details as yet, and I think the market kind of agreed with that sentiment.
Okay, let's go to the States now. Reddit saw quite a big data breach where users' information was compromised. When we were looking at the Nasdaq a little bit earlier on, we didn't really see any movement on that market. Has it affected the markets in any way? Because we know that Facebook really took a hit from similar incidents like that.
Yeah, so Reddit is not a listed company, but certainly it puts the spotlight on serious issues within the social media space generally. So we have had data breaches with a number of these sites. You also have the issue of an escalation in fake news. On Twitter, you have a major problem with these Twitter bots that troll kind of big accounts or important people. So there's quite a few issues in that social media space. And a data breach at a company like Reddit will just kind of add to the issues that they're having. And we've seen these so-called FANG stocks or the big tech stocks coming under a lot of pressure, and I'm sure that this won't help.
Okay, let's go to England now. The Bank of England Central Bank raising interest rates. What's that going to do?
Yeah, I mean, it was entirely expected. So England has seen, or the UK has seen, its inflation rate increase quite a bit. The intention at this point in time is not to necessarily halt inflation. We know growth is also not particularly strong in that region, so the bank would want to be quite measured in its approach to raising rates. I think the real issue here is that rates were at record lows for a really long time post the global financial crisis, and the bank has to kind of they have to lift rates while they actually have a chance, because if in the next instance where they need to stimulate the economy, they need room to actually do that. And they feel that if inflation is escalated or elevated as it is right now, it's a good opportunity to increase rates. It was entirely expected.
Chantal Marks from FNB. Well, thanks so much for your time on SABC News.